right now? I think it's actually looking pretty good. I mean, how do I say this? Give me 1 second. I forgot. Got to push a few more buttons. There we go. One more second. And there we go. Okay. All right. Good morning, guys. As I was saying, I think the markets, I mean, it was a nice bounce this week. Um, Economic reports came out Wednesday. Markets sold down -1% plus, and then pretty much recovered rally. And then now across the board, it looks okay. Like I think things are starting to look pretty good actually. Um, Markets have a bias towards going higher. I think it's just how things are orchestrated. What's the word for it? How things are just designed. The nature of it is just to keep going up, and that seems to be what the markets want. So if that's the case, then I'm looking forward to potentially this week from all the things I'm seeing in the marketplace. It doesn't look too bad. I think it actually looks starting to look pretty good. Um, Again, it's been choppy, right? If we look at the past 5 days right here, 1, 2, 3, 4, 5, right? Last week we were basically 1, 2, 3, 4, 5. Wait, 1, 2, 3, 4, 1, 2, 3, 4, 5. Okay, last week we were basically right here, right? So last week, truly, it actually looked pretty scary. But our rules are rules. It went back above the 50-day moving average. Wednesday was tough, and then Thursday, Friday, it seems like we're pushing near all-time highs again. Now, this looks good, but we need to stay above 560, right? So yes, if you ask me, markets have been very choppy. But it's just, it's the conditions that we're dealt with, right? We can't really control this. We just have to adjust with the markets. V asked, do you think it could be a fake out pushed by retailers who are oblivious to what happened in terms of markets being so high? Um, Maybe. I mean, I'm also seeing, again, like one of the techniques that I use is we can look at the S&P 500 and we'll look at the world as well, but I'll go in there and kind of like just scan through like maybe like 100 stocks or 50 stocks. Like like 50 core stocks, and then you kind of realize like, like there is some money being deployed here. So we could say it's a fake out, but this is actually real capital being deployed. I can't tell you if it's a fake out or not. I think that's more like after the fact. But what I can see is actually like some players picking up some names, right? So then like I know V, like you mentioned, like you like Unity, right? I like Unity now too, because now I finally see a buyer. You see the difference there? Like I don't want to react until I see a buyer. So a lot of the things I've learned in the stock market is that I rather much wait for confirmation. And so now we kind of have confirmation, a little bit of confirmation. It's not a lot, but some confirmation right here, right? Some volume kicking in, some buyers stepping in, right? It's not big yet, but it's if I zoom out, it looks well, okay, I shouldn't say this looks attractive. This actually looks pretty bearish. This actually looks like it could go lower. So I'm still patient, right? But in terms of like 2 days of activity, yeah, I see a little bit, but not fully sold on it just yet, right? It is above the 100 MA, yes. Key things that we want to look at, but truly it has to go above the 200 MA, right? So yeah, give or take. But there, again, if we're talking about the markets as a whole, I think it's still chopping around and it's still holding up, if you know what I mean. In other words, like if we look at the S&P 500 right here, right, we're back above 560 right here, and we're attempting to go to all-time highs. And when markets go to all-time highs, everything else tends to rally. So I like that. I actually like how that looks. V says, yes, I was seeing Unity as looking better too. Yes, but could be a good swing trade. I like swing trades on the long side over the 200-day moving average. Anything, not over the 200-day moving average, it's not ready to move just yet, I would say. Again, it's just a rule that I like to stick by. Uh, there we go. Let me see. Wait a minute. Okay, so yeah, and good to be, let's see, and good be good, and good be good to get some for long term. Yeah, if you're looking at long term, right, I definitely do think, some of the names are getting ready. I actually have a long list of stocks that I don't know how many names this is. It's like over 20 stocks today that I'll probably be looking at. But you guys also let me know what you want to look at. So let's dive right into it, guys. Let's start from the top. I mean, we're not going to do like too much top-down analysis. I think we did that last week. I think for the most part, the last 3 days after the economic report, it really changed the character of the markets. I am seeing the markets improving quite a bit here because again, if S&P 500 is nearing all-time highs, that's a signal to go long, at least in my book, right? That's how I interpret it. So S&P 500 right here is just above or just about at the all-time highs right there, right? All-time highs is basically that price right there. If we can get over that this week, then it could become a very bullish market. If not, then we just go back into the chop, right? If not, then a scenario could be like we just go back down and we just chop around for a little bit more, right? Because there are stocks that want to go into all-time highs, like Facebook and stuff like that. So again, I mean, this is optimistic, but I'm aware that this is a major resistance point. Until we clear that resistance, then we can't really push higher, right? Again, this is the rules of the market. I mean, you could try to challenge it, I guess, if you want, but I can't control the chop. I'm just interpreting the chop, and it is, and again, we are in a choppy period, right? So it makes it tough. If we pull over, look at the Nasdaq over here, right? Uh, I mean, markets are overall, I still think it's doing pretty okay. It was looking bad last week for sure. We look at the Nasdaq right here, and we see that it's just above, almost above that trend line right there. Again, I didn't draw that trend line. It's an automated trend line, but I like to rely on automation. So if we get above that line, then it kind of speaks about it's suggestive of like where prices are trying to go next, right? So that's why I see with the Nasdaq right there above that price, then things are starting to look pretty good. We pull up the Dow Jones Industrial Average, same thing, right? Just simple technical analysis. I think simple really works. This one's looking actually pretty good, right? Because this one is approaching all-time highs. Hold on, let me zoom out, make sure. Yep, that's pretty much all-time highs right there. This is the monthly on the Dow Jones Industrial Average. Again, we look at all the indices and we can see that this one is just about all-time highs right there, right? If markets are willing to push to all-time highs, it's suggestive that buyers are willing to pay up. If buyers are willing to pay up, then I think we're going to see appreciation. We're going to see higher prices. At the same time, if we consolidate all this, actually I have one more index to look at, IWM right here, right? This is IWM. Let's see what the status of IWM looks like. This is now looking pretty good. Very choppy, right? Why is it choppy? Because, look at this. We failed to break out right here in this area right here. We went all the way down, closed below the 50-day moving average, so I became bearish. Bounced on the 200-day, went back above the 50-day moving average, so then I got bullish, right? And then found resistance, lower high right here, and then back below the 50-day moving average, and then I got bearish, and then now, held the 100-day moving average, and then back above. So last 2 months of interpretation have been very difficult, as you can see, because I'm really just reading as the charts are being painted, right? But I think once we get out of this like choppy, you know, trading range, well, choppy environment, there you go, that's the word. Then I think things get a lot better. Now, this is looking at the indices, right? We also want to look under the hood and see if other players are accumulating other stocks. And that, in some cases there are some stocks. Now, if I were to aggregate it and use the fancy, expensive indicator over here, see what the fancy indicator is saying, look at what the grandmasters are saying, right? Remember, this indicator is built off of like other professionals who have been in the stock market well, longer than me, like 10, 20 plus years. And basically, it's the collective knowledge of those grandmasters and what they think. And if you look at it, it's still a yellow light right here, right? So based off of their indicator, again, this is what I have right here is the S&P 500 plus the Nasdaq plus the Dow Jones plus IWM. I know it's kind of small, but it's the upper left corner right here. So I added it all together, and basically this is what the indicator is saying, right? By their definition, by the grandmaster's definition, again, this is the expensive $8,000 indicator. By their definition, it's still a yellow light. But for me, I'm seeing that markets are improving a little bit, maybe, just maybe, right? And we're still in September. I think I'd rather wait until like October, so give it like 2 more weeks. But this is currently what they're seeing from their perspective. Now, let's look at the FANGs real quick, right? Let's pull up just one stock, and we could actually do all of it actually, but we'll do FNGU, right? FNGU is the ETF that represents the FANGs essentially, and this one is also still in a yellow light right there. right? So let me show you. See, still yellow right there. So again, by their definition, it's still a yellow light, not ready yet. By my definition, I actually think it actually looks a little bit better. I might even try to, chase some trades this week, and I'll show you the ones that I'll be looking at. Because I am seeing some stocks that are going into all-time highs and stuff like that that look pretty good. So this is FNGU, but let's actually give you guys a more, precise analysis of it. So what I'm going to do is I'm going to put in Meta, I'm going to put in Microsoft plus Nvidia plus Tesla plus Apple plus Amazon plus Google. Am I missing anything? Microsoft. Is that all seven? Hold on. Okay, all right, fine. One, two, three, four, five, six, seven. There you go. That's the FANGs or the Magnificent Seven, right? So if we combine all the Magnificent Seven, I know there's a lot of data points over here, but you can ignore all this because what we want to look at is just the recent, couple days. And again, this is the daily chart, by the way. So every candle represents a day. And so now that I have the Magnificent Seven in here, right, the seven stocks, you can see that this indicator themselves, according to the Grandmasters, some of them are saying maybe long right here, but for the most part, it's still yellow, right? It's still a yellow light. But by my definition, it might be, developing into a potential green light coming up soon here. So I kind of like this situation with the markets pushing into all-time highs. But here's proof to you guys that I'm leveraging other trader knowledge. It's just not myself. I think when you get to maybe watching the markets for a long time, you now want to rely on like not just your own analysis. Of course, you want to have discretion on your own analysis, but I found it to be really powerful to overlay with other grandmasters in the game that have designed their own quantitative analysis and sharing their code essentially, right? So that's what I'm using to kind of see what they see. And it looks like from what I just showed you, the Magnificent Sevens and the indices, from those two perspectives, it still looks like a yellow light. Yellow light, but then I'm also seeing, based off of my judgment call, I think this week it might be a little bit of a yellow light with a green light. So there are some things that I see in the marketplace that I do like, and I'm going to share with you guys today. So that's the indices and the Magnificent Sevens, right? And again, why do we analyze the indices and the Magnificent Sevens? The indices for the most part represents the USA markets, and it basically represents USA sentiment, how the USA institutional investors are feeling. If USA institutional investors are willing to push stocks into all-time highs like the S&P 500, then I am gauging that institutions today are feeling quite bullish. So with the current structure and setup of the S&P 500, because we're so close to all-time highs yet again, that tells me sentiment is pretty positive. So that's why I like markets going into next week, right? Again, but full disclosure, it's been very choppy, and I think we're just about to get out of the chop, unless we fall back into the chop this week. So both scenarios apply, but I do like the posture of the markets overall going into next week. Now, it's not like a super green light. I prefer super green lights because super green lights then it's like a low, turbulence market and a lot of plays are going to work, right? So let's look around real quick. I do want to just share with you real quick international markets. We're going to just dive into that really quickly. But Japanese markets, I want to see if that's going to cause any, problems in the USA markets or anything, right? But I kind of doubt it. We are still below the 200-day moving average on the Japanese market, but let's see if that could push through and clear back above. That would be healthy for the USA markets. And then European markets, again, let's see where we're at in terms of the 200-day moving average. The European markets have pushed right back above the 200-day moving average, right? So yes, it's been very choppy, and the signals, the call outs have been, just like up and down, up and down. But once we clear the turbulence, it's kind of like, if you've been on a plane recently, right? When a pilot has to maneuver through turbulence, they have to elevate the different, amount of feet above ground, right? 10,000 feet to 35,000 feet. So the part where it gets really turbulent is when the pilot is trying to climb higher into higher elevation. So by the time, they find like a certain elevation, like 35,000 feet, things get a lot smoother. So I'm also looking for something like that across the markets, and I'm trying to just see what indicators or what collective markets are saying right now. Now remember, for the VIX over here, sub 15 is really good, low volatility. We're almost there. We're kind of at 16.75, right? Unless the VIX were to spike again, then things will look, pretty bad, I would say. But I want this to be below 15, right? Again, this is if I was a pilot, these are the turbulence or wind conditions that I'm looking for to basically determine what stocks I want to play. But overall, it looks kind of good going into next week because we had the change of character this week with the economic report and everything. So yeah, that's the quick snapshot of what it kind of looks like around the world right now, guys. Let me know if you have any comments, but we're 15 minutes in, and what I want to dive into next is actually like stocks that I'm looking at because I think if we stay positive, right? The rule this week is if markets could go into new all-time highs, or if the S&P 500 could hold above 560, right? If we could hold above 560, above this line right here, 560, then I think a lot of the stocks that I'm targeting is probably going to work. So it might be an interesting, but then you got to be aware, like last 2 weeks of September, right? Um, not the greatest environment, but it's looking pretty good unless we chop back down. Evan says, "What is the TLDR of the economic report?" Also, good morning. I actually don't have the TLDR of the economic report. I just remember like what the markets did. If you remember on Wednesday, well, if you watched it on Wednesday, markets dipped quite a bit, and then buyers stepped in and pushed it above the 50-day moving average. So Wednesday was really like, again, this was what we saw last week, right? Last Sunday was basically where we were at right here. And this was clearly, objectively speaking, what we see on the screen is bearish. But what happened was 2 days in, and then Wednesday, economic report came out, right? Those inflation numbers, and then basically big range right here, sold down, but then buyers came in, and then we got a reversal. So it is, again, what I'm saying is that it's been choppy, but once we clear this chop, then I think smooth wins ahead, and that's what I'm looking for. SK says, so Wednesday will be the key market swing this week. No, this was actually last Wednesday. This was last Wednesday. Either you're talking about Fed rate cuts lead to rally or gap down. That could be the case too. But I'm really just looking at price at this point. I think price is the most honest thing because whatever happens in the marketplace, then it's going to reflect, right? So let's get into the list of stocks that I'm looking at. If you're curious about the list that I have right here, this is basically my notes for today. And these are all the stocks that I know it's like over 30 of them, right? I was just doing a big scan, and these are all the stocks that could potentially run. So let's actually dive into them and understand each situation. And that's what I plan to go through today. If you guys have any individual stocks that you want me to look at, please feel free to ask away. But what I just did so far was I just showed you guys a calibration to what I'm seeing in the marketplace, right? We also use the advanced expensive indicators and see what the grandmasters are thinking. And this is what they think about the Magnificent Seven, right? So what I did was I plugged in the Magnificent Seven because I noticed some people just joined. I'm repeating a little bit. I do apologize, but I just plugged in the Magnificent Seven right here, right? So Meta, Microsoft, Nvidia, Tesla, upper left corner, Apple, Amazon, Google, and basically, according to the grandmasters, they're still perceiving a yellow light. So now you kind of see multiple, again, not just what K thinks about the markets. I'll make my own judgment call, but at the same time, we want to leverage like other professionals who have been in the markets for 10 plus years and what they think, right? So they still perceive a yellow light. For me, I'm starting to perceive a little bit of a green light. So let's dive into that and let's look at some of the stocks and what strategies could we play, because there actually are some individual stocks that look pretty good, and some individual stocks you want to try and capitalize on instead of how do you say it? Try to capitalize on it instead of like let the market conditions deter you from even trying. Uh, SK says, I think this is the third top for S&P, so if this fails, it could significantly lower, I think. Maybe, but I at this point, SK, like I'm just gonna wait until like it happens, right? Here, let me show you. I think you just joined, but let me just show you what I think could happen to the S&P 500. Basically, I turn off my annotations over here, but again, we're at the all-time highs, right? We're almost at all-time highs, and again, remember, all-time highs is bullish indication. We want that. Now, if we hit resistance right here, like a triple top right here, then we'll come down to the 200-day moving average, but I think we just continue to chop. But there is some, evidence that we are trying to move higher. I think for the most part, the main trend line that you want to watch is that automated trend line that's drawn right here. So if we don't hold this trend line this week, then yeah, we'll go back to like yellow light, red light, right? So this is the line to watch this week right here. But if we could go above here, then again, I'm waiting for confirmation. And I think that's how we should operate, is when prices confirm to the rest of the marketplace, right? The 8.2 billion people on the planet, when it confirms to everyone else, then that's like the time to deploy, right? Then that's the trigger point. We need the markets to trigger for us. So I know it's been rough because it's been choppy, but this is currently where we're at. So I like this line right here. Maybe I'll change the color real quick. I like this purple line right here, SK, to hold this week, right? Because that again, you just 2 points make a trend line, And then you set a rule on that trend line, which is like, as long as we respect this trend line, then we continue to make progress in the marketplace. And if we make progress, then prices are actually appreciating. So that's the view right now. Again, we had a quick rally above the 50-day moving average right here, and we're pushing towards all-time highs. So if that's the case, let's now jump into some of the stocks that I'm looking at. So, PLTR, I mean, this one, Palantir, moving into all-time highs, right? You gotta like things that move into all-time highs. Again, that's the whole mantra of like, don't be cheap. I'm sorry, it's not all-time highs, but it's approaching like, basically 100% retracement right here. From IPO right here to IPO pop. I know it's, let me stretch it out for you guys. IPO right here to IPO pop, right? And then basically distribution right here. Sold down for a whole year during the tech bubble right here in 2022. And then made its way back really quietly. And then now approaching 2025. Well, next year I'm already talking about. We're just about 100% retracement right here, right? So it's attempting to go into all-time highs. It's not at all-time highs yet, but this is actually what I look for, which is a stock that is actively appreciating, because a stock that's actively appreciating it's basically saying if there's a trend, there's a buyer, and if there's a buyer, then we have appreciation, and that's where you're going to love it because your portfolio is going to be in the green. But if you're, if your head's in the dump and you're looking at stocks that keep going down, well, you're going to see more red because that's just the nature of the game. So for example, like Cloudflare, right? Cloudflare looks pretty good, but like there's no confirmation yet, right? This is an example of like there's no confirmation. If you buy it here, you're just gonna fall into pain. So it looks good, don't get me wrong, right? I definitely see, this is the monthly, by the way. I definitely see like, a trend right there, which is suggestive of a buyer, and lots of volume right here as well. So I like that. But if we zoom in, right, I won't like it until above this trend line right here, which is automated drawn, right? I didn't draw that. So we need to be above that. So I want prices to come up. Oh, I want prices to come above here and bounce on it, and then I have, some sort of confirmation. That is also in line with the 200-day moving average, which is right there, if you see that, right at that arrow. So I like it above the 200-day moving average and above this trend line, because again, that's progress, right? Something I've learned is like, like we want to see the stock make progress in our favor, and we have to define the progress. And the progress, it could be like a trend line or moving average or a setup or whichever, right? So this has been going sideways for a long time, and so above this would be progress right there. If not, then it's just going to keep going lower. For example, Boeing, right? This is why if you look at the last couple weeks here, right? We saw that Boeing, was like cheap relative to Lockheed Martin and RTX or Raytheon, right? The other aerospace and defense companies. Now, it's funny because remember the mantra is don't be cheap. If you're cheap, look at Boeing now. We were looking at Boeing before earnings over here, right? Because I was being cheap. I was saying like, look, yeah, it's relatively cheap, but the better one is Lockheed Martin. I said. We'll pull up Lockheed Martin real quick because this is like a analysis of like pairs trading, right? In aerospace and defense. So if you bought Boeing here because you thought it was cheap, because you zoom out, you see that Boeing is down like from the highs to lows right here is down like 63%. You're being cheap, right? But going back to the daily chart here, look, it's gone lower, and it looks like it actually wants to go lower. This is actually confirmation of a short right here, because we actually have confirmation of lower prices now. So this is actually a short trade. This is a short trade, and resistance would be 160, or stop out would be 160, right? Now, if we go over to Lockheed Martin, because that's the don't be cheap, right? Go for the expensive one. Look at tongue twisters. Look at Lockheed Martin over here. It's actually performing. Look at that. It's still holding highs. So I rather buy this one, right? In my opinion, non-investment advice, because there's an active big buyer that has been coming back and buying and pushing prices up. That's what we need to do as smaller players, right? We need to gauge what the larger players are doing, and that's like primarily the technique that I think the majority of us are stuck to using, right? Unless we're like the less than 1%, like 0.1% on the planet who are super rich or super elite, then yeah, we wouldn't be talking about this. But I think the majority of us, we're like the 99% over here. So we're dependent on what these 0.1% of the players who control 99% or 90% plus of the capital, we need to behave the way they behave, right? So this is the better one, and you would have got killed if you were being cheap, right? So I did play a little bit, and yeah, like that position didn't work out. But that's because I thought like, there might be a little bit of like extensive relative valuation here. But I knew I was being cheap over here, so you don't want to size up on this one. You rather play Lockheed Martin, in my opinion, right? So this one is going lower. That's what you get for being cheap. But if you pay up, you still be up right now on Lockheed Martin. So always learn to pay up is one of my mantras at this point. And we'll recognize it. It's okay to be cheap. Don't get me wrong. It's okay to be cheap, but there are certain criteria to be cheap, right? Like, and we have to know that we're being cheap, and we have to extend our runway, our timeline of being cheap. So, for example, like PayPal, right? If you're gonna play PayPal, you know you're being cheap because it's down 80%. But remember, right? A stock could decline in like less than 6 months. This thing could correct it in like less than 6 months or 6 months, but it'll take like 3, 4 years to recover. That was the example, the lesson that we learned from Netflix, right? If I pull up Netflix right here and show you, right, we got several examples now, right? Look at this. So this is the example of don't be cheap. So in terms of how many months it took Netflix to go down, that's like 8 bars right there. So eight months, 8 months to go down, right? And then it took it 25 months to recover 100%. So it took like 2 years. Two years. So it could go, it could collapse 75% in 8 months. That means if you had a short trade, you could make 80% of that. You capture 80% decline in 8 months, and then 2 years later, if you're trying to be cheap, it's gonna take it took years for it to recover. So that's the ultimate lesson right here, right? So if you want to play things like PayPal, if you want to be cheap, you're gonna pay up for being cheap with time. That's what I've learned in the marketplace. So PayPal right here, yeah, it's cheap, but you're going to be paying 2 years before it gets back to 300 versus a stock that is already hitting all-time highs and is getting even more expensive. Those are then that's even better, right? Like you see a different character in that stock, and it's very fascinating. So, for example, we'll use SMCI as an example, right? And we won't use this recent decline right here, but we'll use this one right here, right? If you bought the highs right here, you bought the breakout right here at 350, right? Look at that. In a period of 2 months, 350, 2 months. This is Daniel's trade right here. 2 months, you go from 350 all the way to close to 1,000 in 2 months, and that's the reward that you get for paying up for not being cheap, right? And again, this mantra works universally with everything, with like networking, everything, with your education, everything. So when you pay up, you get access to things quicker. Then when you're cheaping out, you get access to more noise, right? You're not gonna, not quality networks, not quality deals. That's the same thing with venture capital I've seen, where I've like what deal was that? I forgot what deal, but let's just say the deal was like an Uber or something, right? These VCs at the time, like I have VC friends who are like, okay, like I didn't want to pay 100 million valuation at the time, but then I didn't know Uber would go to 100 billion, something like that, right? So I learned that now, which is like we gotta learn not to be cheap and know when to be expensive. And in the markets, you get rewarded a lot for knowing how to be expensive, right? So for example, the hardest trade right here was at 350, right? 350, big volume came in, big player came in, it spiked to 400, and then people are like, oh man, I missed it, 400. But then after that, boom, 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 all the way up to 1200, right? So you have to learn not to be cheap. And that's what I'm saying. The signal that I'm seeing is that if the S&P 500 is moving to all-time highs, guys, right? It is not a indication to be cheap. If the S&P 500 is going all-time highs, right, which is where we're at right here, almost over 565, then it's basically saying that the markets are willing to price it higher. So if they're going to price it higher, then we know stocks are going to work. So these are some of the signals that we want to pay attention to, right? Again, these are worldly mantras that it seems so simple, but it means a lot to me, because try it out. Try being cheap, and then you should try two portfolios, right? Have one portfolio where it's like I'm gonna be cheap in this portfolio, and then have another portfolio where you're gonna be not cheap. You're gonna be willing to buy up, and then you see a big difference. V says yes, people are so dang cheap they don't understand value, return on investment, time. And then V says this is why they struggle in so many different ways. I mean, I was there too, guys. I mean, I think we all we're cheap at some point. Well, I think we all start off like all the newbies, they start off as cheap, right? Which is like you play penny stocks and you might get lucky, but in the long run, penny stocks go down. So then you just might get owned, right? I'm using like Counter-Strike phrases from back in the day. Sorry, internet language. Like look at this right here, right? Like this is an example of like what I saw this week. 5 days therapeutic. Again, we're looking at a lot of stocks. Different lessons, by the way, because once you understand the behavior, then sky's the limit for us, right? Imagine over here. Let's go back over here, right? Back to when it was like $5. Let me ask you this. All right, it went from one day. That's a 1 day wonder right there. It went from like $3 to $11. Let me ask V or anyone here. Would you buy at 11? You already saw what happened. Would you buy at 11? Right? Yes, because we need to understand that what happened here is a big, gigantic player just came in and just they know something that we don't know. Right? They have some sort of insider information or whatever. I don't know what, but the price reflects something big just happened. And then look at, I mean, it went back down, right? Obviously, because it was just, too many standard deviations, right? So yeah, you would have got hurt if you bought 11. So you also have to you have to remember that as well. But once it starts to come back right here, there you go. It goes back to 11. Now you're probably saying, oh, it's too late, right? But then eventually what happens is that now it's at 31. So a lot of times that it's about buying higher, right? It's like learning to buy higher right there, right? Like at right here, like it gaps up to 16. You're like, oh, it's too late. Boom, boom, boom. 32. Right? Yeah, we have to trust the whales because the whales know more than us. But we also need to learn to exit when the whales exit as well. So you have to learn both sides of it. To both learn both sides of it to capture the amazing waves. And then the second part is to protect ourselves, right? Anyways, pretty powerful play right here, right? Also this one right here, AppLovin. Again, I'm also seeing again this is if we dissect the markets a little bit further now, I am seeing activity, right? So here's another example right here. Out of nowhere, 1 day pop right here, and it clears all-time. Is that all-time highs? Look at that. So about to be all-time highs, but recent highs, right? So recently, would you buy this right here at basically popped up right here to 97, right? 90% of people will say no, I missed it. It's too high, and then boom, 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 right? It goes higher. It's always like that. So you gotta learn not to be cheap. And if your mentality is cheap, then you're never gonna capture these big, gigantic moves. And that's what we're gonna practice in here. We're gonna practice not being cheap. That's the momentum trading style. But if you want other, if you want me to craft other forms of analysis for you guys, I could do that as well, right? It's about helping you guys understand that there's different techniques to play this game because maybe this style doesn't fit for everyone. So if you want me to come up with a style for you, we could talk about it and guide you through the process, right? Like if you really want to understand the fundamentals of an entity and I start dissecting it, that might help you as well. Because sometimes like people need to yeah, someone needs someone else to build confidence in the entity or understanding like how big it is, how much money is flowing in. Sometimes people just need the explanation, right? So if you need that, feel free to let me know as well. How would you set your stop loss for these type of trades? It would be the prior day's low, right? So the prior day's low, so the prior candle's low, usually, or some moving average. So I know this is hard, right? These are very hard trades because they're just moving so quickly. And so maybe like it might not be the best for the beginner, but let me try another one. So this one's another one that's breaking out to new highs. This one has the intent of going higher, right? This one is long right here. So my stop would be the day's low right here. So example, so I would participate in this, right? I would have bought I would have bought the high right here because I'm not gonna be cheap. I'm gonna buy the high right there. So the top bar is where I buy, right, and join. So we're gonna zoom in. We're gonna zoom into the 5 minute. Oh, it erased my lines. Okay, let me put this on and hold the lines. So my stop would be the low of the day, right? If I was gonna, position in that day. Again, if you're buying that day, right? And then my entry would have been the highs of the highs. So that would have been my entry right there. So the top one's my entry, and then the bottom one's my ideal exit or risk if I'm, you gotta stay disciplined. So right there. So I would have bought, somewhere right here, right? I see that, it came out of the gate. This is 5 minutes, by the way. I would have bought right here and held. This is for a swing trade, by the way. Yeah, yeah, yeah. This would be the stop loss right here. Well, the low of the day would be the stop loss, right? Pretty standard practice, by the way, if you're not familiar. So the low right there or the 20-day moving average, or the lower the prior candle. So because the goal, the objective is, remember what I said last week, guys, where it's like there's two ways to play the game. You could play it and hold it for 3 years, or you could time it and play it only when it runs. So example would be, I'm trying to think of an example right here, SMCI, I guess, or Nvidia. Yeah, maybe Nvidia is a good example. The goal is to buy right when it runs, because that's when you're going to be green, versus like you hold it for many years, right? So for example, maybe Expensify might be a good example, or 8x8 is a good example. What's the other one? Ring Central? Was it Ring Central? I think it was 8x8 and Ring Central, the one that we analyzed with Bernard in the past. Okay. Either way, they both had a great run. I think it was Ring Central, RNG. And then they had a big decline, right? So, and then maybe a big run. Let's see. Yeah, here we go. So, I'm trying to think here. We analyzed this one before. Those stocks are doomed overall. Yeah, I mean, yeah, this is a doom pattern right here, right? But what I'm trying to capture is there's money when, if you want to be efficient with a position, right? Maybe it's Nvidia. Let's just do Nvidia. Let's see if I could find a setup that makes sense and explain to you my logic. Here we go. Okay, yeah, this might work, right? So let's say, I need to refresh this because I need the tools to pop up. Give me 1 second. It's for me to modify or annotate the charts and show you guys. There we go. So let's say, one thing is like one play is you could be a long-term investor, right? And hold Nvidia, uh, let's just say hold Nvidia here, right? That's 55 months right there. That's 5 years, almost 5 years, right? One way is to play it, excuse me, is to play 5 years. That basically means it went from $9 to $36, and then you had half of your, well, went back to $12, and you were pretty sad right here, but then now it went back up, and you'd be pretty happy, right? So you can play 5 years, the way I see it, or you could play the moment it starts running, and you hold it for 16 months, a year, but you capture the bulk of the move, right? That's momentum trading right there. So, and don't get me wrong, both works, right? Again, this one you could play. Okay, let's separate these. Damn it. There we go. So here we go. Let's do that. Right? You can hold for 70 bars, or you can hold for 16 bars, and every bar represents a month. So the momentum trader would try to aim at capitalizing the 16 bars, and then the rest they just don't play the 71 bars. So like the other 55 bars, they go do something else. They go play another stock that's in play, right? So what we're trying to do is identify the moment when the stock runs, and we just capitalize on active deployment from the institution. Does that make sense? Like the institution is actively deploying capital like right now, like in a period of 5 years, right, or from 2019 to 24. That's way more than 5 years. Uh, uh, I'm saying that's 5 years. Um, in this period, right, the strongest institutional period was basically just this last year right here, right? I mean, I'm not saying like it's bad to not play. I'm just saying that, you know, there like you could be a lot more efficient and time the capital, right? And that's essentially what we're trying to do here. Though folks might not believe in the concept, but it actually works. I believe in it. So the question is, do you want to hold it for 5 years because you can, or do you want to hold it for 1 year, right, and really capitalize on the move? Both both methods work. It's just how do you want to make your time efficient, I guess, right? Hopefully you guys see what I'm talking about here. Because there are stages in a stock, and a stock will run when it really signals to you. So for example, let's look at ServiceNow, right? ServiceNow is approaching all-time high once it loads up right there, and we zoom out. So that's all-time highs right there, right? And this is the part where it looks really expensive. It's the hardest part. But believe it or not, this thing could go a lot higher, right? This thing could go over 1,000. We don't know how high this could go, but I like this. I like this because I see it. It's starting to run, right? It basically came up, right? It came up to all highs right there, and it's building up. It's been built. Oh, geez, that's such a bad annotation. It's building up right there, right? So this was choppy, I know, but it cleared now into all-time highs. So buying all-time highs, it'll be a runner to go higher, right? And it has to be scary. It cannot be easy. Like to make the money cannot be easy. That's why I've learned. It's about embracing the hard stuff. It's about like biting your tongue and saying this goes against my cheap mentality, right? But the stock is actively appreciating in value. Do you want to capture it or not? That's the other question that you have to ask yourself. So this is a play right here, right? V says, yes, I want to learn how to capitalize on the runners. This is why 2 hours on a Sunday morning has been a great investment for the past 3+ years. I want to be like Bernard when I grow up. Yeah, I mean, well, we could talk about positions, right? But this is an example of position where let me ask you guys, right? This stock is on a trajectory to go a lot higher. It's on a trajectory to go to like $1,500. Like you could kind of see it, right? I might be wrong, but why would it go to all-time highs? Ask yourself that. Why would an institution push it to all-time highs? Why now? Why not before, right? Right, and even then, if you bought that trend line long term, that would have been great too. And we have a lot of these setups right here, like that looks like this. This is the monthly, by the way. So, these are highs, $700, right? Came back, retest above 700, boom, starts to run. Now above 800. So this one's probably gonna go higher, right? How high can it go? Well, that's not up to me to decide. Bernard says, "LOL, never grow up." Right? It's very hard, and it has to be hard. But that's where the easier money's at, is what I've come to realize, right? Agree, Bernard. This is why I have an acronym: Wild and Crazy Kids. Wild and Crazy Kids. That's funny. So I like ServiceNow. It's going into all-time highs, and it's probably going to push higher, right? Now, one of the key things is that we need the environment to be right, because if the environment shifts to a not strong green light, then these plays won't work out. These institutions won't be actively pushing prices up, right? This is more of an advanced concept that you probably wouldn't get out of a textbook right away. Most textbook will show you, how to do technical analysis, how to do fundamental analysis, how to evaluate the business, how to look at corporate analysis, all the basic stuff. But then in the later stages, when you kind of get the game, I guess, then you start thinking about like the psychology of the other players and how they go about deploying capital. So this is a little bit more of a advanced topic, right? And it's harder to believe because I think not many people have come to this sort of analysis, because really it's the institutions that have come to this analysis. V says, sorry if I missed it, Kay, but what is stop loss for swing trades for us corporate slaves who can't or don't want to day trade? The prior candles, or the current candles low, or the prior candles low. Like you should respect that. So the prior candle's low, basically, or the current candle's low, because if we time it right, and it's the day that the institution is accumulating, right? I mean, sometimes I've seen like my friends where we spot a trade and we're right, and then it's up like 3, 4, 5% on the day, and then they get scared or like cold feet, and they just take their profits, and then next day it starts to run, right? So it's hard. It's really hard. It's not easy. And I think the philosophy, uh, when you get to the point, is that you start to realize that it has to be hard. Because if it was easy, then everybody would be able to figure it out and make money easily. But that's not the case. So it's hard because we don't know how high a stock could go. But that's something that you just gotta learn. So Palantir, right? Here's an example, right? We'll run these examples over and over through the list I have right here. Palantir, we zoom out. So right now is at recent all-time highs from what we could see on the screen right here, right? All the way back to December. We zoom out, it's basically approaching this IPO high over here, right? So it's making progress right here, and it could go much higher. We don't know how high, but it's basically in play. It's pushing higher. Institutions are making a trend. When there's a trend, right, the trend is your friend. Evan says, I heard people say look for trend breaks to take profits or get in on the stock. What are your thoughts on that? Yeah, yeah, yeah. Like a trend break, right? We talked about that last week with like how to spot a reversal and stuff. Um, I agree 100%. Like I thought about it, right? Like here's a trend right here, Evan. Like this trend line that I drew right here. That's basically in line with the 50-day moving average. And I thought about it because like let's just okay, think for a second here. Like let's say okay, I'm a little bit on the younger side compared to like let's say someone like Warren Buffett or George Soros, right? Way 60, 70, 80 years old. And if they've been on the planet for like double, I guess more than double my age, don't you think like they're not gonna try and work hard? Like it's retirement, you know? It's like, hey, I got $1 billion and I'm not really trying to work hard, right? Like you really think these, people like double my age are gonna want to work hard? Like this game has to be easier in a way, right? So I'm pretty sure they're also leveraging like simple techniques, and maybe it's like us younger folks who are overthinking it and using too much techniques. Maybe I don't know. That could be the case, but in the end, it's just like, you just kind of buy stock and it appreciates in your favor, right? But then like most people never go beyond and think about what is the meaning of this game? Why does this game exist? Why does the stock market apparatus exist? Right? And it exists because of just complex, towns and states that evolve into major cities that need to like, do deals across different cities. Like this is like a modern transaction platform, right? So it's the marketplace. It's the ultimate game, but then again, like 90% of consumers believe it's gambling, but it's structural to society. It's important. It's where liquidity, you want to be in liquidity. Like you want to swim in liquidity. You want to swim into money, right? This is where it's at. Like this is at the end of the day, this is where the capital goes from, your like again, like if you work for the money, then you have like an emotional attachment to it. But start thinking about if you were to manage this global economy, right? Or manage a business, or just think about the bigger picture of what's happening here, right? Like why is Palantir a $79 billion company? And then ask yourself, go out there and ask like what building is worth 79 billion? And then you realize this game is way bigger than any physical real estate you can see, right? Like this again, we like the it goes back to population on the planet, which is 8.2 billion people. And I want you guys to, oh, this is not correct right here. Current, right? We're currently at 8.2. There we go, 8.2 billion. It's current, right? And it goes back to you have to question yourself this, which is like on the screen here, it says there's 8.2 billion people on the planet, but can you physically see 8.2 billion people? You cannot, right? So therefore, in order to see the bigger, broader life, it's on a darn screen. Does that make sense? You cannot see everything in life with your eyes. At some point, we hit physical limitations. And the only way to see scale is on a screen or charts, right? And if you could learn to overcome that, then now you're not thinking like traditional, I guess investors who are like, I only buy things that are real that I could touch, right? Then you disregard the massive sheer economics that this thing has influence on. 79 billion. So I think the end game of capital and wealth is like right in front of our eyes. And the funny thing is that I didn't realize it all these years for so many years. Maybe it was like the last couple years I kind of realized like, oh shoot, like this is what an end career looks like, right? Even if you were the CEO of Nvidia, you only have meetings with your like all every week. You only have meetings with your key leaders, who then have meetings with their business units, right? That's it. Like if you're Jensen Huang at the top, of a $3 trillion company, all you're doing every week is just meetings with the business, with the key business players. And that's it. You can't, you cannot, just even Jensen Huang, he cannot see all 29,000 or 30,000 employees and what they're saying, what they're thinking. He has no control over that. At the end of the day, all he can see is the KPIs on his analytics dashboard. right? Because that's how you see your wealth, $3 trillion worth of wealth at scale. So it's weird, right? It's weird that in the beginning, like, we start to work and then we think about like our hard-earned money and what it means. And then you purchase a property and you're like, this is the real estate that I worked hard for, right? Only to realize that as you start scaling up your wealth, you realize like the bigger wealth is like intangible and you can't see it, it's invisible to the human eye. So we need to learn to be more analytical, and that's what we've been doing every Sunday, right? For the last, shoot, like, am I gonna say 9 years? I don't know how many years now, right? Every Sunday we put in the analytical brain work to realize to come to this realization that the only way to see life at a larger scale, right, is basically on a screen. So in other words, like in this journey every Sunday, I've probably taken you guys, and this is my realization as well. We've we've probably traveled several lifetimes without realizing it in this Sunday Investment Club. Why do I say that? Because what you see on the screen right here is a reflection of other people's lives, right? And how they collectively, 30,000 people collectively work together as a unit to keep a $3 trillion entity called NVIDIA alive and to perform and have 122% quarter over quarter sales performance and rock 61 billion in economics. We can't see these changes in real time, but we see it in analytics right here, which is what we're talking about. So the fact that you're diving in this with me, like, by default compared to the average human being, we probably live multiple lifetimes already, or seen multiple lifetimes than what a normal human being would ever see. Isn't that crazy? It's mind blowing, right? Because there's a quote that says, a person that doesn't read any books lives like a lifetime, one lifetime, but a person that reads many books lives multiple lifetimes. Why? Because, like, you read, and in a way, when you read, you're kind of closing your eyes. Not you're not closing your eyes, but you're reading the text, but then you're thinking analytically of like that fantasy story or some abstraction or some logic, right? Like software is like a logical layer or hardware layer, right? We never see all this, but then like we see it on a screen. It's wild, right? So then if you read many books, you actually see a lot of like how life has evolved. And I feel like the more we look at analytics here, like I start to realize like, oh wow, like we through these Sunday sessions, we saw how like $100 billion was deployed, but like we kind of take it for granted, right? So talk about seeing money, seeing people move massive amount of money in real time. We watched it. We watched the stock market tank, right, with like COVID and everything, and then we watched the governments print a ton of money. Like these are really large events that all happen on a screen. Oh, I pressed the wrong button. Fred, I'll show you, right? Like what I mean by that. Like these are things that change lives that we saw on a screen, but yet I think we just kind of walk away forgetting like how substantial what we see on the screen is here. It's wild. So therefore, like, to meet the, I guess the brightest minds on the internet, it's really just like you don't have to physically be in the same room. You just have to intangibly share a thought. And that's how you could go far. So for example, right, 2020 right here, look at the amount of balance sheets of money printing that occurred, right? So in 2020, we had 4 trillion. The central bank's balance sheet was at 4 trillion right here. And then we locked down the COVID pandemic, and then we basically printed or accumulated or bought more bonds or their balance sheet assets, could be bonds or whatever, and it went to 7 trillion. This was a massive amount of injection into the economy. But like we don't really see it and we don't really feel it immediately. But on the screen, this is what they have to report honestly. And so as an analyst here, as an investor that, eventually you retire at 65 or 70 or whatever, and we're managing our capital, we have to pay attention to these changes here. And it means a lot to like society and what it'll do and influence society. So, from 4 trillion to 7 trillion, and then we saw the biggest stock market rally ever up until 2022, right? When then they started tightening right here, and then we basically saw the biggest tech collapse ever. A lot of tech layoffs, but it didn't bleed into the traditional economy. It was really just like it slowed down the innovative or growth economy, right? The speculative economy, which is like the tech economy. So you see that like the central banks basically maneuver this, and cause it to slow down right here. But they didn't tank the traditional economy. The traditional economy is more so like where the average person hangs out, where they only monkey see, monkey do, right? I have to physically see it to be able to understand that I'm operating in it. Versus like if you're in engineering, like software engineering or financial business, like stocks and stuff, it's like you don't need to see it, but analytically we need to understand that large economic forces are moving, right? It sounds wild. I know it sounds very wild. Every one of us in here, we dream of having $100 million, right? But let's just say right now, let's just say out of nowhere right now, Bernard or Evan or V or Liz or anyone, like just imagine right now, we just sign off and you suddenly own a $1 billion company. Then you're suddenly rich. That's actually what being a billionaire feels like. You suddenly have a government or a legal contract that says you own a, I don't know, $10 billion company, and suddenly you're a billionaire because now you could walk into the bank and they'll say they recognize that you have that contract ownership of that $10 billion company, and that it has historical operating, blah blah blah, whatever credit profile attached to you, and they will loan to you more money. And then what do? You go out there and you sign more contracts and own more real estate or whatever. Like it's just that's it. Like that's what wealth looks like. I realize for, for the longest time when I was like, investing in these startups, I was like, dude, this doesn't even feel like wealth. Like to me, it's like the amateur way, right? Like wealth is like, oh, having like, $100 million in your bank, but you don't want that either. It's real wealth is like your name is associated, attached to something, and the legal system reflects that and understands that. And wherever you go, it's socially reflected, right? Socially reflected. Think about that for a second. Wealth is like socially reflected, like well, binding agreements that says you own this and so you have access to this. I mean, look, like I guess like I think that's what it is to be rich, right? Which is like what's this Selena Gomez party at Steve Martin's house? Yes, party with Selena Gomez. I think Bernard's like Bernard's drinking on a Sunday or something. She is now a billionaire. Oh, I didn't know that. But well, like billionaire because we socially created that value. Excuse me, right? I don't know. It's just kind of wild when we think about it this far at the end of the day. Like we're really just playing like numbers on a screen, but that's how the world works, right? It's is that what we call a banana economy? I don't know what you call it. It's just that's just how it is. It's again, if you play the traditional way, which is like I worked hard and for my blood, sweat, and tears for this money and this real estate. But then the truth, guys, on the other side, there are people who kind of figure out this game and then just made money from like just understanding the mechanics of the game. And they were early equity holders or capitalized on something, and they just made a lot more money the easy way. So the traditional way is like, I work hard for this life, which is like, you'll make upwards of like less than, I don't know, 5 to 10 million, less than 5 to 10 million in your lifetime. And then the business owner who grind, they'll probably make like 5 to 10 million on average, I'm guessing. And then the people who learn how to play the equity game and like really play the equity multiplier game, like venture capital and stuff, I think those folks they go on to like build like 10 million plus type of wealth. It's kind of how I perceive at this point. It comes down to be a choice. I realize at the end of the day, like, do you want to, you know, like agree to playing the slow 1 to 5 million and play the 401k, like all these games that the businesses are offering, or do you want to kind of like climb above all that and then play the other game that's like much like what the 40-year-olds and above are playing, really the 50-year-olds, the executives are playing, which is like owning a big chunk of a business that appreciates and you become a billionaire like Selena Gomez, right? It's just a different modality, or I don't know what you call it. It's just a way to operate. But to get to that point, you have to be very strong in going against a lot of what society has to offer. Because at that point, you're kind of like entrepreneurial in thinking. Let's continue with stocks here, guys. I know I went on a rant there, but hopefully that was insightful or enlightening because it's definitely enlightening for me. It could take you a long way when you kind of realize that, but it's still hard out there. I'll tell you that. Like at the end of the day, no matter how much you know about the game, it's like You still have bills and stuff to pay. It is what it is, right? We still got to earn the points here. Okay, so let's look at some other stocks right here. So let's look at man, I got a long list of stocks over here that I want to go through. But if you guys have stocks, let me know. So Palantir, if we saw Palantir, it's gone up a bit. It makes me think about like what other potentials are could be in play. So Palantir is an AI related platform stock, right? Software stock. And if it's going to all-time highs here, what other plays can we think of? I mean, I like Palantir here. I think it could go higher. And then if you were to position here, right, maybe you could do the weekly low. So I'll pull the weekly right here, and you could do the low of the week right here, right? So let's say you buy at 35, your stop is that weekly low right there. Just use the prior candle, whether it's the day or week or even month, as your stop loss. Always have a stop loss, is what I've learned. Risk management should be the number one thing that we focus on. So if Palantir goes up, then it makes me think about like, okay, well, could there be interest in other AI platforms that could potentially be building up, right? What do I see here on C3.ai or AI? Again, I don't think the consumer crowd is coming to this, so nothing much here. I'll probably start, analyzing this one when we're above the 200-day moving average. So nothing right there. How about the other, AI names like SoundHound over here? This one might look interesting because it's like, we're kind of like we're trying to front run a move, right? And this one looks interesting because if we look at it, there's massive amount of volume right there, right? Which is basically suggestive that, there's amount of, games being played right here at that $5 mark. So I think personally for me, and it's also above this quantitative trend line right here that's automatically drawn. I didn't draw that, right? See that right there? It's above that. So I kind of like this for maybe like a starter play here. For if it starts progressing, it goes above 5, it goes above 6, then you start add. I think this could be like a narrative runner, right? Basically, a narrative runner because well, one of the AI stocks are pushing up. So consumers, as they typically are, or retail investors, I think the nature is like, oh man, I missed Palantir. What's cheaper, right? And so this might be a symphony play, they call it. Um, so something to think about. This could be a strategy moving into the next 30, 60, 90 days here. Let's go on to the next one. So that's SoundHound. Now, there's also I noticed the credit card AI companies are starting to move. So it's been a long time, but Affirm is above the 200-day moving average if you see right there, right? There's a lot of things that are going on the screen here that's quite nice. One is that it had earnings, it gapped above the 200-day moving average, gaps up right here, right? So this is the earnings right here. It gaps up above the 200-day moving average, and it comes down, does it almost touch a 200-day moving average, but then it comes back up. That is really good right there. I like that. And then at the same time, right, the automation, you also have price moving above here. So I think that's a long signal right there. If we pull up our, expensive $8,000 indicator over here, and we slap in Affirm, uh, AFRM, you also have, well, I mean, the long signal is back over here, right? But this is okay. I mean, it's still in the long signal range. So according to the grandmasters, they're also still long this one. So I kind of like this one here, right? So this one could be a runner. Now you asked about risk management. What's the risk? Use the bars low right there. So if you get in here, use that bars low, or I mean, again, you could adjust it, or it could be the high right there, right? But use that bars low right there. That's the stop. That's the risk right there. So I'll put that maybe red. Again, this is us like, generating ideas and stuff, right? That's the risk point right there. Is it gonna happen? Nope. Nope. Can't click on it. Oh, there we go. So the risks where we want to manage risks right there. So entry right here. Again, not investment advice, okay? I would take entry right here, and then my risk would be that right there. That's the risk. If it fails, it fails. If it fails, wait for it to set up again, and then try again later. Don't be like, oh, I'm revenge trading. I'm gonna try again. No. If it fails, just let it fail. If it fails, let it go. Let it go like this. Let it figure out itself. And if it comes back and holds this, then yeah, now you're back in. Have rules, right? Have standards. Don't be cheap. Have standards. Don't. I mean, I guess don't be cheap is also don't be cheap for yourself too, right? Don't be like, oh, it's cheaper. I'm gonna buy it. Have standards for yourself. Um, I think that's what's going to work. So I like Affirm. Now, speaking of Affirm, we also have Upstart, right? Oh, well, let's actually zoom out Affirm, give you guys a little bit more perspective. And Affirm, remember, this is it's a great company. It's not a bad company. One of the founders is ex PayPal, Max Levchin. Maybe I forgot his name, but because I don't feel too confident saying the name. One of the PayPal mafia founders, right? And they're doing 2 billion economics over here, 2,000 employees. It's a 13.69 billion valuation. Sales we were talked about. There is no income, so it's. But then one thing I don't like is the shares outstanding. But that's okay because it seems like someone recently in the last 30 days here kind of likes the stock and they're pushing it above the 200 moving average. Um, Ideally, I want it above this trend line. Above 45 would be great. Above 45 would be really good. If we zoom out, this is what it looks like. Remember, you're buying from a low, right? So it takes years for it to recover. But we also want to count how many years has it been, right? It's been about, it's already been like close to like, 3 years right there, right? We're closing in on like, well, I not well, okay. At the low, you probably say is like right here, right? So maybe, okay, yeah, maybe, well, 2 years. It's 2 years at a low, right? And then now you see some interest, and you can also see the volume right here, right? We're talking about real market action here. See that volume? Biggest volume ever. It's occurring right here. So the biggest buyers ever, they're basically holding this $20 mark right here. So I like this here from like, in terms of like time frame wise, like how long to hold. That's hard. I mean, that's hard too because you will have to once you get into a green position, you kind of have to follow up with stock and see if it meets your criteria, right? And then learn how to like strategically take money off the table because you also don't know how long it'll run for. Again, that's all the hard part, right? That's all like when to get in to now that you're in, it's in your favor, how long to hold, or it's not in your favor, where to get out, where to stop out, to I've been holding it for a while now. Should I sell it? It's always hard. It's always going to be hard. And I think if you've done it long enough, you're always going to run into those questions like, oh man, here we go, another one in the green, but oh man, how long is it going to go, right? Sorry, drinking some coffee. Anyways, that's a firm right there. Let's look at some other ones. Let's see. So speaking of that one, there's also this one right here, right? Because these are companies that are kind of in the same category, right? They're both like AI credit related companies. So we want to see that is it, what I try to dissect is is it like a firm only that's rallying, or is there like a larger player that's trying to build up a portfolio with exposure to last mile credit services? Right? Last mile AI credit services. That's basically what they are. AI credit, last mile AI credit. Um, or like like the high frequency trading of credit cards, right? Category. So I try to see like is it an industry movement, right? So I mean there's a little bit of buying here. There's a little bit of respect at the 50-day moving average, but not enough for me to really like the setup right now because it's still uh, in a choppy range, right? The goal is for it to go above a certain point where it's no longer choppy, and that point right there is right here. Oh, whoa, whoa, whoa. That point right there that I'm looking for is basically right there, right? Because once we get above that, again, it's the mantra of don't be cheap, right? It's like, hey, but Kay, why can't I buy it here when it's cheaper? It's up to you, but just know that the behavior, the character of a stock changes once it's above there, right? So I'd rather buy up here than down here. Doesn't that kind of go against like counter? It's like counterintuitive, right? Like, wait, like you like it, but hey, you like it, but you only like it here and not here when it's lower. There's a reason why. There's a reason why. Because character changes when it's up there, right? Speaking of that, this also reminds me of Tesla. So Tesla's character has been developing. Let me show you what I mean right here. Uh, John says, I like the upstart ran corrected, but didn't correct below the original breakout. I'd say that's bullish. What do you think? Yeah, I mean, let's go back to upstart real quick. Let's double click on John's comment right here. So let's see what he was referring to. So he likes that it broke out. So let's annotate. So it had earnings right here. It ran, it gapped up, it ran. It basically broke out right there, right? Held that breakout level as well. I like that as well. And the beauty here also is that that volume area is right around that breakout area. So this gives me a lot of confidence that this area right here is there's a buyer hanging out here. Right? I don't know who, but it gives me a lot of confidence. So I like this area. So yes, you could, I mean, if that's your style, you want to buy right here, that works too. My style is more like I'll pay up because I know when I pay up, it's more likely to run for when I play a reversal. But this is also a nice reversal point I see as well, which is like prior resistance right here. So this one was resistance, prior resistance, now becomes support with high volume and 50 MA. So lots of confluence right there. I like that. I like that, but again, like this type of trade for me is I only anticipate it from here to here, and I'll expect resistance right there. So it's really just like that much, right? Versus like if it goes over, then sky's the limit, right? If we go over this price point right here, then now I know that this thing could go 75. So it's just a different behavior when it gets up here, right? Up here, it should, in theory, it should start to, you know, like the institutions, I'm guessing, the theory behind it, I'm guessing, is that they get insecure. They're like, oh, shoot, it's going to highs. If I don't buy here, I might not get a chance again. So they also get insecure. So I'd rather buy it up here. So how do you play momentum in a down market? You can't. You don't want to play momentum in a down market. You can, but choices are slim, right? So that's why we go back to the S&P 500. Yeah, yeah, puts could be. That's what I was saying. Like it becomes favorable on the put side, but right now, so Morris, like we're looking at the S&P 500, right? And we see that it's basically above here. So it's telling me that if we break out new all-time high prices, it'll signal to every other stock that, okay, things are gonna get more expensive. If things get more expensive, then I like the positive momentum environment. Now, what you're describing is that let's say we hit resistance here and we bounce on the 50 MA, we come down, we bounce on the 100, but we fail, we come down, we go below the 200-day moving average, then I think it'd be downside momentum at that point. So it'd be a lot more puts. But all the while in this range right here, it would just not be favorable. Like a lot of the breakouts won't be working, and you're just gonna have a tough time, right? Versus like a market that's elevating to new highs, you're gonna have an easier time. So environment means a lot, but not always the case, right? Like sometimes in the worst environment, you might have one stock that's like the shooting star, that's like it's going to outperform. So that's something to think about as well. Now, going back to the credit side, the credit, there's also another company that does financial infrastructure that I'm aware of as well. Again, I'm trying to detect that. Right now, I'm trying to detect, is it a individual stock that's moving, or is it broader financial services, technology related stock movement? And if you can see right here, the volume right here, massive volume. You see that accumulation? This is just lovely right here. I don't know if you guys see it, but the more you practice, the more you see it. So that volume right there, right? It's basically look at how many times it tested right there. So that volume right there, 1, 2, 3, 4, 5. That and off the 200-day moving average here as well. So we know that 5 times right here. We know that there's a dedicated buyer right there. Like very high probability that there's a buyer right there. So we know that that's our low, right? That's like our risk right there. Now we have a higher low, right? The higher low is this point right here. And this is also a pretty higher low as well. So the higher low right here, right? Let me draw it for you, right? 1, resistance, resistance 2, resistance 3, resistance 4. Now we have confirmation that resistance became support. So now we also know that this is a support right here. So I would actually buy here, right? You got that break of a trend line right there, right? You buy that, but then you probably missed it now. So now you're kind of forced to buy higher. So you're gonna have a range right here, right? I mean, if you're coming in late, I'll just buy it there, but then I know that this is my range. It's like a 50-cent range. It's kind of painful, but I'm anticipating this one to go higher. But you guys see what I'm talking about? We see that the buyer held it right here, and then we went in a trading range right here. We cleared resistance. That resistance became support. That's progress right there. So now we zoom out. This one actually looks kind of interesting. Look at that. We zoom out and we see the largest volume ever happen around this price right here. So this is very attractive right here because that line that I drew right there, that's support. That could be my risk right there. So now I have some comfort getting into this, knowing that if that area fails, then I'm going to get out. But I'm anticipating, the risk reward that this thing could go up to like $10 or whatever, right? So because again, this falls into the category. We go to a website, right? We go to a website right here, financial infrastructure category, right? So we go in here, we go to company, we go investor relations. I'll show you a little bit. The platform for digital origination, right? It's consumer banking because a firm's going up. Therefore, again, is it is it an industry movement or is it individual stock? And the more I look at it, as I'm showing you guys, it looks like it's an industry movement. Let me go over here and we'll look up Blend, BLND. So I like that, right? I'm looking for the markets to improve, and I'm kind of seeing that. We'll go in here. We'll look at the S1 real quick, and I'll just show you the business. This is Blend right here. We'll go to table of contents, and well, real quick, I always like to see the VC, so we'll go to principal shareholders. We'll click on principal stockholders right here. We go down, and you can see like what players were involved. So Co2 was involved, Greylock was involved, Lightspeed was involved, right? Lightspeed had the most, 13%. So we know these are tier one VCs in my opinion. We go back above, right? So now that we know strong venture capital funding and is beaten down, right? So is at a cheaper price. We want to understand the business a little bit more, and then their vision right here is to bring simplicity, transparency to financial services, so everyone can gain access to capital that they need to better their lives. Okay, I could read more and more, but right now the stock's moving, right? So I need to make a decision. So I like that. I like that. I see players accumulating. I'm creating a story right now. I see my support and resistance in my trading range. This was a trading range right here. It's a very strong trading range. And most recently, it respected the support area in the trading range. So I like that, right? And I know that the next time it breaks out, this high right here, or maybe right here, it already broke out, it's probably going to go higher. So there's intent for it to go higher. Now, if I want to do a little bit more analysis, I want to see who's holding it today because what I showed you earlier was the VCs that, oh, geez, I got to log back in. Give me 1 second. Give me 1 second, log in. Uh, 1 second. I pull it away for security reasons because you never know who's watching. I gotta be careful with security these days. But it's like consumer, so it's like at the same time, it's like like what are you gonna take from me? Like, okay. We go in here. This is Blend right here. We're gonna go to ownership. I want to see who's holding it today. Is the CEO still having high conviction? Is it still founder led? Nima seems like head of Blend right here has a ton of shares. Nima has 5 million shares, right? And I want to see, excuse me, anyone with conviction right here. This one looks like he's like or VC. So Greylock is still holding. It looks like. So Greylock is still bullish on this company, right? That's a good. I mean, look, like you get to invest with Greylock, as you can see right here. So this is a great setup right here. I mean, like you got some dedicated VCs in here that are still holding after IPO. They still like the company. Uh, we could read into the earnings presentation. I mean, to better understand the company. Give me 1 second. There we go. Understand the company. Let's put this back in. All right, we're doing a little bit of fundamental analysis, but let me see. Sales and marketing, this is how they spend their money. Free cash flow that's available. Their guidance. Let's see. Segmented revenue, title segment, Blend Labs, consolidate. Okay, right. Well, yeah, we could look into all this. I do want to see cash real quick. Let me see. This is where's the, that's the income statement right there, but I'm looking for the balance sheet. Sorry. Let me see. Blend platform right here. It's usually the bottom. Cash paid. I mean, worst case scenario, I just go here, go back to Blend Labs, look at their most. Oh, I could do a press release. What am I doing? Let's go to here, do a press release. This is the press release right here. Get access to the most recent balance sheet. Here we go. Current assets right there. How much cash they got? Very little cash. 45 million. Oh, 100 million. 100 million cash. Not bad. I mean, that's what's expected for this type of size. So altogether, total assets 185 million, but they got about 142 million in cash, which is expected. To 800 employees, sub a billion. Whoa, sub a billion market cap. That's interesting. Uh, yeah. So you see the analysis there? Hopefully, running through the analysis is helpful for you guys because we kind of do it over and over and over, right? Now we have a pretty good understanding of like what this all looks like. So yeah. Uh, I mean, I kind of like this. I mean, it's coming off from bottom, so you know that if you're gonna play this, it's gonna take time, right? This is no overnight thing. Versus like if you pay up for the expensive one, well, that could just make your day in like 2 months, right? Like SMCI. SMCI was one that was expensive and got more expensive, and now you see what I mean, right? You pay for being expensive, which is I'm talking about this right here. This is what I'm talking about right here, right? Where it's already like 300 bucks at the time, it was higher, if I recall. I forget now, right? 300 bucks to 1200. That's what you get for buying expensive stocks. Like you get massive institutions running in. But if you want to play the cheap, beaten down stuff, then you need to add in the years because that's just how it is. I notice the nature of the market, right? So beaten down one that another beaten down one I could think of is like Snapchat over here. Um, by the way, gold stocks are on the move this week. Look at Snapchat. So this is a great example of like if it's weak, it just gets weaker, right? So this is another scenario right here where it actually looks like it might want to go up, but then look, it's back down at lows, and this actually looks like it could go lower. So this major buyer right here, they're going to be in the red, right? Whoever bought this area right here, if Snapchat fails to hold here, which is basically around that price point right there, it's probably going to go lower, and that big player is going to be in the red. That big player is not going to be happy. In which case, that big player is going to have a, if it goes too low, that big player has to, meet a margin call or like risk policy, whatever in the company or in the fund, and then they start liquidating more, and then this thing could actually go even lower. So that's why you don't want to play these, fallen knives unless you're very tight on risk management and you know that, you have a long timeline on it, right? Because if you do, you're going to get hurt. Um, let's look at some other ones. Robinhood. Right? This one's been pretty active. Again, it also kind of plays into that financial tech category, like fintechs. It seems like fintechs are on the move, right? So this one, the key thing to note is it's back above the 50-day moving average, and it basically broke out a recent high right there, right? Recent breakout right there. So I'm just looking to see if this one could go higher, right? That might be interesting. But zooming out, let's get a little bit more of a clean data point. This is what it looks like when we zoom out, right? It's coming off of a low. We know that this is, you see I know you can't see the volume, but there's a massive amount of volume right there. Basically suggestive that this $10 is probably the low right there, right? And so we know that at one point it was like 80 bucks. So there is room for this to run back to IPO price of 40. Once it gets to 40, it's gonna get pretty bullish, right? So you don't, I mean, these are ones that, if you have the patience, you don't want to miss out on because you already see the dedicated player right here, right? And let's go dissect Robinhood real quick. Let's pull up Hood, see who's holding it. Robinhood right here. We're gonna go ownership real quick, and we're gonna go down, and we're gonna see the majority, right? Jason Warnick and Daniel Gallagher are the majority holders. They got about, again, I'm looking for skin in the game, right? And then let's see down here for the fund holders. These are the fund holders. We have a lot of conviction here. A lot. Ribbit is still holding. Wow, Ribbit is still a holder. Wow, Ribbit is still very bullish. So Ribbit is another VC fund in Palo Alto. It's interesting. They're still like they still own 4%. They really like the stock. I mean, it is what it is. So this is a VC fund, right? Very quiet money over here, I would say. Um, would be nice if I could be like them one day, where I just operate like my own family office. But you gotta have dreams, right? Let's see who else. Anyone in here that has conviction, right? Because this is a VC fund, but Index Venture still, wow, they're still holding on to this. Dang. Uh, let's see, BlackRock, Galileo, what's this one? Thrive Capital Management. Yeah, I mean, some of these guys are still willing to hold, which is pretty fascinating. Uh, 36% of their, I mean, again, when you see over 50%, 40, 30%, that's like basically a venture capital. Like they're still holding from the VC days, as far as I know. And then Kathy Wood over here, right? Kathy Wood, Arc Innovation. This is a good play. Like this is a good long-term play, in my opinion. Because like again, I'm not basing it off of like I know all the fundamentals, right? But I'm basing it off of like it's a really good cap table. Like other players, other strong players are involved in supporting this company. So to me, it's like, all right, now this kind of narrows it down a little bit to what I know, and I know that $10 is like the lowest point, and then recently it tested to $14 right here. So let's do $10 is the lowest point. A buyer will come back and buy there with a strong cap table. It looks like cap table is a capitalization table, or the people who own the company that we were just analyzing. And then we know that it came down recently to this price point right here. So we know that this is a nice support area. So I mean, long-term wise, if it comes here, I like this area. I like accumulating right here, which is basically the 200-day moving average. comes back to the 200-day moving average, and it's been making progress, right? And I think we're kind of due for like a crypto run. So if crypto is positive, then this becomes positive as well. And I think this one has definitely captured like consumer consensus in terms of like a platform play, or like it's just like a go-to for their brokerage accounts, right? This one and Coinbase. But anyways, let's keep going. Let's look at Roku next. You notice I didn't really analyze the fangs today, but I'll be doing it in a report later, the weekly report. But if you guys have any stocks, let me know as well. So here's another interesting one. What can you guys see so far? Right? I have to test you guys from time to time. What do you see with Roku right here as I'm zooming in and zooming out? What do you see? What is it? Where's it at? Was it above or was it below? Right? There's a reason why I like it now, because it's above something, if you guys know. We do see a massive amount of volume right here, which is now acting as support. This is fantastic right there. We know there's support right there. Well, if no one knows the answer, it's basically above the 200-day moving average again. Ah, there you go. Evan said it right there. So above the 200-day moving average, right? Now, if we pull up our fancy indicator over here, see what the grandmasters think about Roku. Let's see what they think. We plug it in here, Roku, and basically you have a recent new buy signal over here, right? A teal. So they're still high conviction. Their buy signal was over here, right? Back at $60. 60, yeah, $60. So their buy signal was at $60 over here. So they bought like around right here, it looks like, around the above the 50-day moving average. But now it's above the 200-day moving average, right? Again, this is be mindful, if you're buying off a low, it takes time, right? And it could also not go in your favor for years, because again, this is what Roku looks like from the monthly. It's down, uh, you know, like 90%, and it could take years for this to recover. So the question is, what players are playing here? Because this is the largest amount of volume it's ever traded at this price point right here. So if anything, it's basically saying the life of this publicly traded stock called Roku, in its max amount of time that it went IPO until now, this highlighted area right here, $50, is the price that has traded the most of all. So therefore, that price has, it's magnetic. It should act as support. If it fails, it goes lower. If it fails, it probably goes to 25. Evan says, is it above the volume line? Most bag holders. Above the volume. Which volume? Are you talking about this volume line that I'm talking, that highlighter here? It is above. Oh yeah, yeah, it is above. So we're just kind of coming up with a thesis about this, right? We kind of know what Roku is, and this one for the longest time when it was rallying, I didn't quite understand it, but then now I realize like it's kind of like TV infrastructure for like the broader masses, right? So the masses are basically on this, and the beauty is that at one point the stock was 500, so it has a nice range to it. The question is that can it recover, right? It's going to be harder, but stocks will have its boom and bust cycles, right? It's just normal, right? This is the boom, right? Boom cycle and then bust cycle, and then now we're back at like stage one, right? In which case one day we're gonna have the next boom cycle. It just happens because I mean fundamentally if you think about it, like is this company gonna go anywhere anytime soon? Right? With the TV infrastructure, that's the other things to think about. I mean, it could go out of business, who knows? But from a sales perspective wise, it went from 1 billion to now 3.5 billion. Shares outstanding, it's been increasing, but they've been losing more money here. So it's interesting that the last 2 years they've been losing more money, but the last 2 years it seems like more investors have or were willing to hold the price here, right? So last 2 years they've been losing money, 22, 23, 22, and in 23, but recently there's been some buyers. So now the question is like, let's go investigate, right? In terms of valuations, trading about 3 times as price of sales, 3,000 employees, and sales performance recently 14%. So it's not a big grower that it used to be. Let's actually go into the website and let's go into the investor section, in which case, we are the public over here, and I think it's at the bottom. Investor, where is it? Company, investor relations. There we go. All right, we go in here and we look at, what's going on, right? Let's see if anything new. Actually, I actually prefer to look at the investor first. So let's go to Roku here. Excuse me. Let's go to Roku. Let's go to ownership. I love going to the ownership here. That's what I paid for. And then see who's in the game, skin in the game. SVP Council Secretary has the most shares right here. Right, it's not always the CEO, as you can see. Some SVP here that controls a significant portion of the business and significant influence, I would say. And then in terms of like conviction wise, Kathy Wood has conviction on this. She's willing to bet 7% of her portfolio to own 8% of this company, 9% of this company. Even her ETF over here. So she's very, huh, okay. So it's something I'm not seeing here. To this day, I still don't, see what it is, but it seems like these larger investors, they like it, right? 4% over here with Nico Asset Management, and then 8% over here, another ARK, next generation internet ETF. So Kathy Wood is really bullish on Roku, right? The question is why? I still don't know why, but hey, it doesn't matter at this point. Like my opinions don't matter, right? What matters is if, Kathy Wood and her peers are willing to deploy capital in this. And by my definition, by my rules, right, it's meet a progressive criteria, which is above the 200-day moving average. Praveen says, hey, Kay, you have some time today. Would like to demo app to you. Unfortunately, not today. I do have to, I gotta go out to, I got a lunch date. So with family and stuff, so I can't, unfortunately not. And I got some homework too. I got to write the weekly report. I want to analyze the markets. But what I'm seeing from conclusion this week is going into next week. There's a handful of plays, or more than a handful of plays, that seem pretty interesting that I think might be worthwhile taking. But that's what I'm seeing right there. So that's Roku right there. That's what I'm seeing with this one. Again, it's not going to be a fast runner, but it's like a starter, right? Almost looks like this one right here, which is coming off of a bottom as well. I mean, I've been waiting for the day where enterprise software starts to shine again. We've been in an extended bear market, I feel. So this is MongoDB right here, right? It's been pretty choppy. This is what it looks like right here. Down, so we had the boom cycle and then the bust cycle and then attempted boom cycle again, but then that quickly resulted in a bust cycle. And then now maybe, right? It's choppy. Don't get me wrong, it's choppy. But what I like is earnings and then it held. So post earnings right here and then it kind of hold right here. Kind of held like right there. So that to me is suggestive. And good amount of green volume right there, right? So it's telling me that some person likes it here, but it's not it's not the greatest hold until like really above the 200-day moving average right there. But just an idea, right? Just a near-term trade idea. That's what MongoDB looks like. Now, also curious, who's holding on to MongoDB these days? Let's open it up. Let's go in here. Let's see who's got conviction. Let's go to ownership once more. And let's go down. And we see that, oh man, this guy. Yeah, so this is a billionaire here, right? Billionaire director as of 8/14. I mean, it's not the most recent, it's like a month ago, but Dwight Merriman right there, right? Uh, and the biggest fund holders on it is inexistent. Everyone's like just like a, less than 1% holder, right? No one's holding with conviction. So that's interesting. But then look at this thing is really big. Look at that. They own 25% of the company. So this is basically Dwight's boss. Dwight Dwight he owns 1.1 million that's 1.1, right? 1.1 million shares. This entity here owns 18 million shares. Dang. 18 million shares of this company. And this is the fund right here, right? So now we're probably wondering like who is this entity? Again, 3 billion. Wait, 3 billion. Why is it only 0.71? They should be bigger, or is it? I'm doing my math wrong. Let me see. Current portfolio. We're studying this entity, right? So this entity has 177 holdings and $3.5 billion. This is what it looks like to be a billionaire, by the way. Like if you're curious about what it looks like to be a billionaire, this is it right here. You're basically playing stocks all day. The weighting, their biggest weighting, I want to see. So Bank of America, but what is this PFD thing? I actually don't know what that means. But they got some energy holding, right? So this is what a $3 billion player is holding right here. It's interesting stuff. I mean, I like this. I try to get ideas from this as well. But yeah, I like usually I look in here. I'm trying to detect a pattern of like their style, right? But this one's a bit interesting. So they got a combination of like banks, utilities, semiconductor, medical device instruments, and then software-wise is over here. Affirm, DigitalOcean, Bentley Systems, right? Again, this is what wealth looks like at scale, guys. So if you understand this, then you understand that you should start building the way we build our wealth is just by accumulating more equity. Just keep buying stocks. Just keep buying stocks in the long run, stocks that pay you. I mean, we could do dividend stocks too. I haven't done that in a while, I feel. But I like appreciation more. Um, but I understand dividends, dividend stocks have a strategy as well, and we could screen those down also. Let's continue to the next stock. So MongoDB, uh, we're looking at that one. This one also looks interesting. So here's a challenge for you guys, right? What what do you feel when you see this once it loads up? What do you guys feel when you see this? You feel it's too expensive, right? So then the goal is the next time we feel something is expensive, we got to go buy it because that's the mantra, right? Don't be cheap. So this one feels expensive and it's expensive for a reason. So I love it when it's above an automated trend line like this right here because that's progress right there, right? So Arista Networks, if you don't know, pretty big company here in Silicon Valley. They're $100 billion. They got 5 billion in sales, 4,000 employees. Sales wise, they're growing about 15, 16%. They are very profitable from what it looks like, and they have no debt, right? So, usually this fundamentally, this looks pretty solid. From the strong getting stronger, yeah, this was definitely getting stronger, and it's approaching all-time highs. So I like this one. I like it because it has all the right characteristics of it's hard, right? It's very hard. It's expensive, and I like it because that's what I want to like versus like the other folks. Yeah, zero debt right here. You see that, Evan? No debt, zero debt, zero debt. Let's actually dissect this a little bit because who's got conviction? Yeah, exactly. I want to see who's got conviction, and I want to see. There's so many things I want to see. So they're a strong player. They're not going anywhere. Let's go into investor relations. Let's go in here and let's pull up ANET because this is a strong one that it just look. The only thing that's stopping us, right? That's stopping any one of us here is that we think it's too high. I'm pretty sure. Like this has all the green lights, the green flags, right? One green flag is that it's hard and prices are at all-time highs. It's expensive. Those are green flags. Don't get me wrong. This is very valuable analysis, Kay. Great to know which whale is interested. Yeah, yeah, I agree. And then the other part is we know sales have been explosive, right? 2.9, 4.3, 5.86, and they're in the billions. And it's small, group of employees, 4,000, and it's very profitable, right? $6.50 per share, and shares outstanding has not been increasing, and there's no debt, and sales wise, 15% double digit, but it's not like 20%. That's okay, right? Uh, there's a lot of green lights in this, right? Now, multiple wise, maybe valuation might be a bit up there, but it's okay. Valuation is subjective. But there's a lot of green light about this. So let's, again, not investment advice, but let's dive a little bit deeper. Let's go in here. We look at maybe a presentation uh, about their data-driven solutions. So it's probably, ooh, actually, I might want to read that. I like reading stuff like that. But I actually want to see a recent earnings results, and I want to see a balance sheet. I'm curious because they're so profitable that you know what it means when they're profitable, right? They have to give back dividends or something. So if not, that's what investors like. That's what Warren Buffett classically likes. Look at their current assets. Whew, whew. They got like they got a lot of cash. They got like this is a lot. They got like 6+ billion in cash. Yeah, they got a lot of cash. This is a green flag. But you know what's stopping most of us? It's too expensive. It's too expensive, Kay. But that's what do you want me to say? Like if they have no debt, then they have too much money. Exactly. And if they have too much money, what does that mean? They got to reinvest into the business, buybacks, exactly, or dividends. So then what does that mean for us investors? The only thing that's stopping us now is that do you have the guts to buy it at this price because it's going higher? There's so much green flags about this. We didn't even look at the shareholders yet. Let's look at the shareholders. You see how we could easily identify a green flag? This is a big, gigantic green flag, but the price is just not easy. And that in itself, I would argue with you guys, is a green flag. If the price is hard, that's a green flag. It has to be hard, right? Because it's easy for the institution. So we go in here, skin in the game wise. This director has the most shares. It looks like they got about 50,000 shares. It looks like there's a Templeton in here. Now, conviction wise, this one's the most conviction right here. This is interesting. So we want to explore this one. Out of all the conviction is this one. And then the biggest shareholders like typical Vanguard, Fidelity, BlackRock, State Street, JP Morgan Chase. So all the big players hold on a chunk of this. But the one that is really betting with conviction, right, is this entity right here, who's willing to risk like almost 11% of their reputation. So, oh, damn, look at this. Damn. This is $23 billion. This is not small. So we're looking at a $23 billion entity. Again, like where do you guys even get this sort of information on the internet? Like you can't find this elsewhere. Like this is this is one of my specialties that that we supply here at the Finviz Club. That's why you guys should join. It's okay. We're gonna look at the weighting, right? We're gonna see why is this the highest conviction position? I'm curious now because this is a $23 billion fund and it's updated as 30 days ago in Arista Networks. Wow, it's their biggest position, right? They're pretty high conviction on this, and it's safer too on the hardware side. I mean, fundamentally, it's such a green flag, right? I mean, I'm trying to figure out what's wrong with this company now. Now we gotta play devil's advocate, right? Let's talk about what's wrong with this company. Let's try to find some flaws in this. So what we know is that there's a 23. Let's see. Evan says buybacks or reinvestment. If your internal rate of return is greater than the interest rate, usually you should get debt. However, if you have so much money, what you don't know what to do with, it's a good problem. Were they not? What? Why are they not using it? Um, I mean, again, that's what share. If you were a board member, you probably ask the same thing. Like, hey guys, like you got like 7 billion in cash here. Like, why are you not using it? That's a lot of cash. So you're gonna bleed somewhere. You're gonna bleed either through buybacks or dividends, and that's gonna benefit shareholders. So from a technical analysis perspective, right? Can we de-risk this as a position? Like for us to find entry, it's hard, but that's a good thing, right? It's a good thing that's hard. It's just freaking hard. Like even I'm looking at it, I'm like, oh man, like another $360 stock, but it's gonna perform, right? Because there's just so much green flags about it. Now, again, you can't have happy ears and everything. You gotta have a risk point, right? So like 320 is the risk point, or a more conservative risk point would be this 50 MA, or a more recent conservative point would be this point right there. Those are three areas for you to stop out if you're wrong, if we're wrong, right? But calls from right here looks sexy because tell me, what's okay, what we don't like about it, right? I guess some of the red stuff right here. We know they got like 7 billion in cash. With multiples kind of on the high end, but that's fine. Don't, you know, believe it or not, high multiples are a green flag versus low multiples. Low multiples mean nobody wants it. There's a reason why it's 18 times. It's because people want it. So, okay, how about we just dissect everything about this, right? Everything fundamentally. So it's in the S&P 500. It's 113 billion. John says, can we see how long that fund has been holding Arista Networks? That might provide some insight into why it's such a large part of their portfolio. Maybe they're looking to take profit soon. I don't know if we have that data point. Let me see. Uh, I don't know if it says when share changes, trade impact, percentage shares. I don't know how long that one, John, unfortunately. I wish, I mean, yeah, I don't have that data point. It would probably be, I forgot, like 13G or whatever, 13F. I forgot the numbers now. We would have to dive into that, but that's like extra legwork, and I don't have that data point. It's not easily digestible data, but that would be definitely interesting to know. Uh, but what we do know is the snapshot of like who owns it right now, right? So okay, so back to it. Let's actually dissect everything and kind of help you guys understand like the stock, a stock truly in and out. So we know it's in the S&P 500. We know it's a blue chip because it's over $100 billion, right, as a mega cap. We know it's profitable. It takes home a lot of money, and the income is like in the billions. It's 6 billion in sales, and sales has been growing as well. The book to share is 26 times. Cash to shares, 20 times. No dividend, so that's probably why the prices are increasing because if it's not reflected in the dividend, if there's no dividend, then it's going to be reflected in buybacks, right? So there might be buybacks, but we haven't determined that yet. 4,000 employees, you could go short and options on it. Well, I don't think you want to go short on it. Sales surprise, I actually don't know this one, but last quarter revenue surprise. Okay, so sales surprise, revenue surprise was 2%. Evan says share buybacks are better for taxes generally. Yeah. And then these are more like SMA indicators, like it's above the 20-day, which is good, right? Above moving averages, that's more technical. Price to earnings is 46 times, but remember, that's the rookie mistake. We don't care about how overvalued it is, right? The PEG is 2.4, price to earnings to growth, basically. Price to sales, 17.9, so that's a multiple. Price to book, 13 times. Price to cash, 18 times. Price to free cash flow is kind of high, 41, but it's not a problem. Quick ratio, how liquid is it, right? It's very liquid, so they could meet financial demands from a quick ratio to current ratio, so they're very liquid. Debt wise, they have no debt, that's impressive. EPS surprise, so they had a sales surprise over here, and then an EPS surprise, so 8%, right? So they're surprising Wall Street, which creates positive sentiment. EPS wise, it's $7 or seven earnings per share, $7.71. Their anticipated next year EPS is $9. So look, they're gonna, it's gonna be even more valuable shares. Uh, Next quarter is $2. EPS this year 19%, next year 13%, next 5 years 20% almost. Next Past 5 years, I mean, it's been actual performance 45 years. Sales past 5 years 23%. So sales performance in the last 5 years, right? EPS year over year, uh, trailing 12 months. I mean, at this point, some of these metrics I don't really look at closely. EPS quarter over quarter performance, 33% for earnings. Sales wise, 16%. And then again, another metric on the technical 200-day moving average. It's well above 200-day moving average. Insider ownership, okay? 18% insider ownership. So that's pretty good skin in the game. I mean, we go to something like an Apple for reference real quick. What's the insider ownership for Apple? Should be smaller if I recall. Look at this. Inside ownership 0.09% right there. So the fact that this one has a high insider ownership means that leadership is incentivized for this to perform. And I don't see why not. I mean, you're in such a healthy position. You want to have a higher percentage of insider ownership. So that's pretty good. Insider transaction wise, in the last 6 months, minus only a little bit of selling. So probably like they want to buy a house or something. So insiders aren't really selling. That's really good. Institutional owned, 71% of it is institutional owned. Institutional transaction in the last 3 months over here is 1.39%. Return on assets. I mean, return on assets, return on equity, return on investments. We got to dive into this. It's like last 12 months and stuff, but return on the assets that they have, return on the net equity of their valuation, and then return on investments. Also something we got to dive in. Now, margin wise, this is a very profitable company. I mean, 64% gross margin, operating margin is 40%, and then 39% profit margin over here. Payout, I don't look at this one that much, but I think it's more dividend. It says dividend payout ratio, so I don't look at this one too much. There's no dividend, which again, it's retaining value. The entity is retaining value. Earnings wise, we're very past earnings. Trades wise, this would be I don't know 24,000. I don't think it's the most recent one. Yeah, that doesn't. I don't know what trades are actually. This one's a little bit newer. Shares outstanding. So we have 300 million shares. The shares float is 250 million. The short float. So not many people are shorting the stock. So that makes sense. Why would you want to short a good stock like this? Short ratio is low. Short interest 2.47 million. 52-week range, right? It's a pretty big range. So we know the stock's been appreciating. 52-week highs is 4% from its highs, all-time highs. So not bad, right? 52-week lows is 100% from its lows. RSI, 14 relative strength index, is an indicator. Recommendation, right? Analyst recommendation. So a buy would be a 5, but they're recommending a 1.181. So it's almost like oh, I don't. I'm sorry. A buy is 1, a sell is 5. So this is a pretty, recommended by analysts as well. Relative volume, meaning like activity wise, is 0.71. So it's not going over. It's like just kind of trading casually. Average volume wise every day, it's about 2 million, right? 2 million in the last 3 months every day. Volume currently is at 1.5, so it's below the average, right? So that's why it's 0.71. Performance this week, months, quarter, these are all the performance are here. Its beta is 1.07, so it tends to outperform the S&P 500. Average true range wise, about $12, 12.8. So $12 is the average move. Volatility wise, 3%. Okay. Target price 365. Right now it's 359. I wouldn't rely on that target price. I think this one probably goes higher. And then that's pretty much it. Previous close, price, and then change. That's it. All right. We just dissected all the metrics right there. We see that EPS is increasing. We see that sales is increasing. We see that shares outstanding is solid, right? They're not printing shares against us. Uh, there we go. We got a pretty strong snapshot of like its financial metrics. Its technicals is all-time highs, and then we go into the business itself. We saw uh, the recent July balance sheet, and they got like a lot of cash and no debt. So current cash right here, right? It's like 7 billion. It's looking good. It's looking pretty darn good. I'm trying to find out what's wrong with this stock, and you guys got to help me find the kinks in the armor over here, right? Last but not least, we could go in and understand the business. So let's go into it. And we also looked at shareholders, and there's one fund, a $23 billion fund that has high conviction on it. It's been operating for 10 plus years, which is great. And what else? What else? What else? Let's download the investor presentation. We got like 10 minutes left here, but hopefully this analysis is useful for you guys. So let's analyze this real quick, right? Because this is a strong stock, and it's difficult because it's high, but you know what that means, right? That's a positive because the mantra is don't be cheap. So let me sip on some water because I've been talking for too much. Pour some water over here. Excuse me. That's one thing that we didn't look at, Evan. You're right. You reminded me once more. I reread your comment. I was like, wait, share buybacks. Where is it this one? I lost my place here. Or is it over here? Arista Home. I wanted to see the recent announcement on share buybacks. So if they announce anything, let's see how much in buybacks they're going to do, right? It didn't say anything about buybacks here. So if I go to view all news, and is there a search bar? There should be something with buybacks. If not, then like, yo, you're retaining a lot of value. Your shares are going to go up. Okay, let's actually understand the business because I actually couldn't see anything on share buybacks as of recently, but very bullish on this company right here. From the fundamentals, right? Let's actually understand the business now. We looked at the financial fundamentals. Let's actually look at the business actual fundamentals itself. The making of Arista's decade. So 10 years, 10,000 customers, 100 million ports, right? So they're basically in the wireless network security space. Everything from, let's see, now number one market share in data center switching. That's what they do. Let's continue next one. Large growing market opportunity, scalable architecture, single operating system drives lower TCO, expanding market adjacencies, and product customer diversification, high differentiation. Got it. At a glance, right? We already know them at a glance, but $70 billion TAM is their market size. Again, this is the same routine that I would go over with like a startup and analyzing them and kind of get a feel of like, do you understand your market and your industry, and tell me more. Their founders and leaders right here. Right. Let's continue. Second quarter company highlights. Launches next generation multi-domain segmentation for zero trust networking. Right. So networking related stuff. We could do a Gartner check on this one as well. Let's do Arista Network Gartner, see if we can get anything recent, see who they compete with, right? Do a competitive analysis. Modern architecture, scalable, programmable, standard base. Here we go. Oh, they got a Gartner thing in here. So they compete. They're up here. Arista Networks, Fortinet is the other one. I also like that one, by the way. Uh, HPE and Extreme Networks. So this is where they compete. Let me see if I can get a quick image right here. Again, this is like analyzing enterprise software, right? It's sort of my go-to bread and butter. Um, Arista Networks as of 2017, though. I need something more recent, but that's okay. It looks pretty good. I mean, I'm seeing a lot of things that I like about it. Let's continue. Okay, ESG stuff, growth drivers. So core cognitive adjacency and cognitive network. All right, how they plan out their revenue. Core is basically data center. So this is if you're bullish on it, right? So core is data center and cloud networks. Bullish on that. AI, come on, data. Cognitive adjacencies. campus and routing, and then network as services, software services. This is what it looks like. Data center Ethernet switch revenue. Okay, all right. Continued growth ahead in switching market opportunity. All right, so these different categories, delivering consistent market share gains versus Cisco. So this looks interesting over here. Shares in ports, shares in dollars. So this is a little bit of an inflection point right here, right? Someone's like saying like we're the next big Cisco. Arista's market leadership in 100G, 200G, 400G. All right. Product and market sector diversification, product trends, sector trends, geographic mix, business model and financial update. All right, let's keep going quicker because it's just balance sheet stuff. I'd be curious to know again, inventory turnover, our approach to capital allocation. Here we go. So first half, so what are they going to do with all this income, right? Because you got to allocate your money somewhere. Maintain a healthy balance sheet. Yeah, they got a very healthy balance sheet from what I've seen. Fund the business, large aggressive competitors. Got it. Invest to strengthen operations, position of existing business if we earn a reasonable return. Supply chain working capital investments. Invest cash balance to earn interest income when accretive to EPS. Look at that. They got to go invest that extra money right there, right? Benefit from high interest income right here, 135 million. Whew, right? They're going to benefit from a high interest rate environment. M&A, so they're going to do strategic deals. They got plenty of money. Like, I mean, 7 billion is to do M&A. And then share repurchase to offset dilution and return cash to shareholders at a price that is accretive. Right? Very strong company. And that's how they plan to allocate their 1 billion in income. Evan says every company will want an AI data center to run their models on. Data center demands are growing. Yeah. So now we're thinking about the extra components, right? And we're not just thinking about where this one's positioned. We're thinking a little bit beyond. Wow, I didn't know there were so many people on the live stream, even though it's covered. It's like it's covered up, but people are still listening. That's wild. Because everything's focused in the Zoom now, guys. If you guys want to join, come join the Zoom. There's a lot of people there. Um, anyways, that's what it looks like there. Let's keep going. I mean, this is a solid one. Third quarter 2024 investor conference participation. All right, you see these other players involved. That's pretty much it. That's pretty much it. We did a pretty thorough analysis. I mean, I haven't checked like what are they going to do exactly with the capital allocation, but I gave you guys points of like why this thing looks interesting. One other thing that we could do is plug it into the fancy $8,000 indicator over here. Give you guys a little bit more value over here. So let's put in Arista Networks and see if we got a long signal, right? So no long signal, but it's okay, right? It's about to be a long signal, right? From most of it, it's about to turn green. So if it's anything, this would be the position right here to be a long signal, according to the other grandmasters who are analyzing this. What else can we talk about in terms of like what we see here? Um, can we rely on Bukowski on anything over here? It's been wide trading range lately, which is something to note, right? Sort of like in terms of like an apex, we put that there, and we definitely see a line right there, but I want to make sure I draw the right line. Like I don't want to be the subjective line. I want to be the objective line. So maybe a line right here, right? So there we go. Got some consolidation right there. But yeah, it's looking pretty good. As long as you get remember, as long as it holds your whatever risk point you have, 50 MA, prior candle, 100 MA, whichever. I think this one looks good. All right, guys. What else? I'm trying to think like what other how much more thorough can we? We look at the leadership. We dissected, this one pretty hardcore. We go into 30-year financials and stuff too, but this is looking pretty good. And we have a risk point as well. Dividend history, I don't think they had any. It does not pay dividend, so no dividend history, right? Uh, Guru trades. Let's look at any accumulation from these guys, right? Because these guys have so much money, but these guys aren't holding a high conviction position like Stanley Druckenmiller and Ken Fisher and all that. All right, guys. Anyways, it's about 12 o'clock. I'm pretty talked out today. I talked a lot. Hopefully you guys enjoyed the session today. Any last questions before we close it out in the next 2 minutes here? Let me know if you have any stocks that you want me to look at. But I basically showed you the principles of analyzing a company end to end for the most part, as far as I know. What looks like opportunity, what doesn't look like opportunity, what are advanced concepts of opportunity that I think that most trading books don't offer today. We kind of covered them, which is like the psychology of like higher prices, right? The don't be cheap mantra. Hey, you're welcome, Morris. Glad you enjoyed the session. But again, guys, if you have any stocks, let me know as usual. We'll keep analyzing. I know the Guru Focus is really powerful. I love diving into this stuff because like we have a pretty much robust analysis of this company now, right? And we understand like fundamentally it's going to go higher, and from a price standpoint, we see the players are also pushing the prices higher. It's just like, man, we should have accumulated this one sooner. But that's okay. It's always going to look hard. Like we can always do fundamental analysis on the next one, like every week. But this is a good one. I like it. I like it. I mean, I like it until the trend breaks, right? Which from the chart looks like if the monthly 10 MA doesn't hold, that's when you don't want it anymore. But there's so much value tied up that it's hard for this one to go down because the value is actually expanding and the shares aren't diluting. So they need to give back the value to investors somehow, buybacks or dividends. When is the meetup in Bay Area? So I'm looking at the next 30 days. We might host a party, uh, and it's going to be like the usual investor networking party in Milpitas. And I was actually before this, I was actually looking up the community center and filling out the application and stuff like that. It's going to cost $600 every time, but that's okay. I mean, it's the price you pay to build. It's don't be cheap, right? So the parties that I'm going to throw, we should have upwards of 300 people, right? 300 people could fit that room now, and there's plenty of parking spots, which is nice. And yeah, I'm looking at the next 30 days. Please do. Yeah, I'm trying to do it before Halloween, right? So in that case, it looks like I might have missed the date, but uh, Halloween is what, the 30? So I'm trying to do the 20. Please do before 28. So it'll be a Saturday, 3 to 5 p.m. I'm trying to aim for the 19th actually. It's one of mine. But once let me get the application in and then confirm with the city that hey, this is we're going to be throwing a party, and then I'm going to be looking at doing it once a month. I think it's a nice pace to build a local network of like engineers. And the room is so big. I thought about this is sort of a geeky idea, but I thought about I was telling Daniel like, hey, the room's so big, like I think I'm gonna bring my own screen. What do you call it? The white screen. Oh my gosh, the projector screen. So I was thinking I'll bring a projector screen in my laptop and we just talk like we'll have one corner of the networking party because it's so big, right? So I just have like a screen and yeah, something like this right here. And I'll just talk stocks to whoever wants to talk about it. I think it'd be kind of fun. We'll have some food. One side you have me with the screen and I'm just talking stocks, and then other people would talk among each other. It'll be fun. But I'm trying to get that. I'm trying to make this happen. I can come early and assist. Please confirm. Yeah, let me get this on the books first because we're aiming for next month. Because the city requires like 30 days in advance, so I need to go tell Daniel like, hey, we gotta move, man. We gotta move on this. Because I mean, 30 days of marketing is plenty of time. And the place is nice too, right? The place is don't make fun of me. Senior Center, Milpitas, Barbara Lee. All right, I know it's senior center, but it's okay. It's gonna be fun. It's actually nice. It actually looks really nice. And it's a big, gigantic room. I mean, they're playing ping pong. It's big enough to play ping pong, but it basically looks like this. And it's really nice. Plenty of parking. I'm even jealous of like the senior folks who go out there and play chess and hang out at the gym. It's like, wow, this actually looks really nice when I took a tour in there. So yeah, uh, I'm trying to find the proper image. It's like this big right here, and people do random different things in there. But I'm gonna be hosting investor tech networking party as usual because we gotta get to 100 events. And yeah, it'll be exciting, guys. Looking forward to it. Any other last questions, folks, before we call it a day here? We developed our investor skills a lot more each and every day. Sometimes you have to walk the path to kind of really see the path, see what it's like. and hopefully it develops the inspiration for us to, do more. Praveen says 19 I might miss. Yeah, we'll see. Let me see what I lock down. I don't really have a solid date yet, but that's the plan so far. I feel like I saw so much of life recently as well. With my trip to Latin America, I realized like we have it really good here, guys. Like I, I just beyond my realization, like how bad they, in my opinion, how poverty or poor it seemed over there from my experience. Um, yeah, like a lot, and this is, I realized this is all of Latin America. I thought, I thought I was going to the most innovative place in Latin America, but yeah, the rest of the world needs a lot more help than I realized. So it definitely grounded me from my experience. All right, guys. I guess no more questions here. So I was gonna go cook some food. I'm getting pretty hungry. It's 12 o'clock. So have a good night. Thank you, folks, for tuning in as usual. Always enjoy the discussion. Hopefully, it was insightful.